Hello. Thank you for joining us today on the Profit Scale Thrive podcast, where we guide attorneys to overflowing profits, scaled growth, and thriving lives. I am your host, Kelly Brubaker. We have a secret though. This is a special place because we don't work with every law firm owner. We support the solo attorneys who are also single parents because we know the special challenges you face, and we know the business advice out there is not always practical for you and your firm. Each week, we will talk about things that will give you the insight you need to stop feeling overwhelmed, to gain back your confidence, and to finally enjoy your law firm and your life again. Hello, and thanks for joining me today for podcast episode number 10. Welcome back, or for those who don't know me yet, my name is Kelly Brubaker. I am a CPA and a business coach who supports solo attorneys who are single parents. I'm also a certified Profit First professional, which means I help my clients implement the cash management system presented in the book Profit First, written by Mike Michalowicz. A few weeks ago, starting with episode 5 of my podcast, I began a dedicated series of episodes to share with you in detail, chapter by chapter, the book Profit First. If you have read the book, please follow along as I will share tips not in the book along the way. If you have not read the book, but you're curious about it, please stick around as we go through chapter by chapter. This week, we're talking about chapter 6, putting profit first into motion. Okay, we're halfway through the book. How are you feeling so far with Profit First? I'm always happy to connect with listeners. Please feel free to send any questions or comments by email to podcast@profitscalethrive.com. Mike starts this chapter by featuring Jorge Morales and Jose Payne, the co-owners of Specialized ECU Repair, who Mike credits as the first business to implement Profit First, which was actually before the book Profit First was even written. So Mike's first book, The Toilet Paper Entrepreneur, included a few paragraphs about the concept he had for Profit First. Jorge and Jose opened their business in 2007 with dreams of enjoying decent profits from their business while working less. And was it a pipe dream? Absolutely not. They immediately embraced the concept of profit first and worked to tweak their taps to support the vision of their business. The result? As the business has grown, they constantly have enough cash in the business ready to fund the growth. New equipment that will immediately provide more efficiency in their production has been paid for in cash, meaning they will eventually have even more profit. Money has always been available to hire new staff when needed, and additionally, they reported that they increased their salaries annually and they pay their staff above industry averages, all while being able to take time away from work so they can enjoy their personal hobbies. The statement I love best from this chapter: once it was up and running, Profit First enabled them to quickly make purchasing decisions without worrying about whether or not they could afford it. How do you make spending decisions now? Isn't one of your first questions, how am I going to pay for this? Can you imagine that not being an issue? They admitted that their accountant was not on board with their use of Profit First, but now their accountant is convinced. Baking profit into every transaction is the way to sustainable and profitable business. Before we get into the nitty-gritty about the day-to-day use of Profit First, I want to remind you again that the taps provided in the book are a suggestion. Please spend time with chapter 5, which is episode 9 of my podcast, Making Your Taps Your Own. So what does Profit First look like day to day? In day 1, here are the things that you're going to complete. First, you're going to tell your people. While Profit First may make sense to you, many bookkeepers and accountants just don't get it. Without even reading the book, they confuse the concept as a different bookkeeping method. It's not. It's truly a cash management system. You can use Profit First without the support or blessing of your bookkeeper or accountant. Please remember that they are not financially responsible for your business. You are. But to appreciate your bookkeeper's opposition, understand that they were taught the long-standing rules of accounting. Accounting is how it is because that's how it's always been. If he or she is still adamant that Profit First does not work, ask them if they have hands-on experience with implementing Profit First. If he or she has implemented Profit First, ask why specifically did it not work? Because honestly, if they have used Profit First before, he or she will know it works every time. If your accountant's response is that nobody uses Profit First, that means that none of his or her clients do, which is fine. But their small client base is nothing in the grand scheme of things, as there are approximately 33 million small businesses just in the US alone as of 2023. Another question for a skeptical accountant: how many of your clients are consistently profitable under your direction? Let them think about that for a few minutes. Most accountants using the old GAAP method of accounting as a way to manage cash are lucky to have profitable clients. I know when I operated my firm as a full service CPA firm, I only had a handful of profitable businesses. Most, like maybe 85%, were constantly struggling to make payroll, desperately could not afford to hire much needed staff, had no money to pay taxes or to pay their operating bills on time. So if your accountant does get on board, great. Having support is a key ingredient to a profitable and sustainable business. If your bookkeeper and or tax person just cannot get on board with Profit First, I'm happy to help. While I am a CPA, these days I only work with clients in an advisory and coaching capacity, but as a Profit First professional, I know many Profit First trained bookkeepers and tax people who will happily support you. Just shoot me an email. So the second thing we're going to do on day one: set up your bank accounts. Hopefully you did this back a couple episodes when we brought it up the first time, but we talked about it in episode 6 for reference. But if you skip this step, then now's the time. And if you're just now opening these accounts, there's a lot of tips in episode 6, so go back and listen again. I promise you that Profit First without the bank accounts will make this so much harder. I have spoken to so many people who have tried to use a spreadsheet or to force their QuickBooks to create a Profit First system that just fails without the underlying bank accounts. As a reminder, once you have your 5 foundational accounts set up: income, profit, owner's comp, tax, and OPEX, you'll need your 2 no temptation accounts at a different bank, your profit hold and your tax hold accounts. Next, you'll need your caps and your taps from your instant assessment. So go back to the spreadsheet I gave you in episode 8 to get these. We will do our very first allocation based on your caps, and those allocations will be as follows. So from the instant assessment that you've done for your business, take the profit cap you calculated and add 1%. To the owner's comp cap, add 1%. And to the tax cap, again, add 1%. And it's very possible that for all 3 of these, you may show in your instant assessment that your current allocation percentage is 0, meaning 0 plus 1. So now we're going to be at 1 for your profit, owner's comp, and tax allocations. So at a minimum, we're putting 1% into these accounts. But take your actual caps, add 1%. Okay, so if our allocations always have to add up to 100%, right? So if we just added to 3 accounts 1% each, that means we need to take away 3% from our OPEX. So whatever your OPEX current allocation percentage is, subtract 3% from that. And now this is going to be your allocations for the rest of this quarter. So remember that this is a marathon, it's not a sprint. Taps are your long-term vision. Adjusting your caps, your current allocations, faster than 1% at a time will most likely be too much of a shock to your business. So start with caps that are at a level where there is no excuse not to stick with Profit First. And then these caps will be your allocation percentages you use for the next 3 months. If you have any questions about how to compute your allocation percentages, please go back and listen to episodes 8 and 9. So the third thing we're going to do on day 1 of Profit First is make your first distributions. So today is the first day of the rest of your life. You are changing your life right now. This is the moment that you are making your business profitable. If you opened your bank accounts when we discussed it in episode 6, you should have some money in your income account, and good for you. If you just opened your bank accounts today, I'll assume that they currently have zero except for your original bank account. Then take your original bank account balance, subtract all outstanding payments from your bank balance, and transfer the remaining balance to your new income account. Keep in mind that you may have a minimum balance required by your bank for each account. Take your income account balance, subtract a minimum balance required by your bank, and now apply your caps, your current allocation percentages, to this amount and make your allocations accordingly. When you see the dollars moved to their new homes, it may be a rude awakening for you because the balances are so tiny. But feel good knowing that you are now on the path of financial clarity, despite the immediate picture looking a bit ugly. This is day one of many where you will make educated financial decisions with clear numbers. You are now on a path to begin to reduce expenses and increase your profitability. Your money now has a purpose, and you will make better decisions to improve the health of your business. So, last thing for day one of Profit First. It's our first day and it's our first celebration. Congrats, you've just taken a huge first step. Seriously. And I'm proud of you. Instead of burying your head in the sand when it comes to money, you're now in control of your money. So, moving on after day one, what's next? Week one. Week one, we're going to try to cut some expenses. I've seen so many of my clients struggle to get their bank accounts open. And the next struggle that comes with next is when the OpEx account does not have enough money to pay your bills. So let's talk about how to manage this account, your OpEx account. You can either increase sales, which by default puts more dollars into this account, or you can decrease your expenses. Now, increasing sales is very doable. And if you need help, check out some of Mike's other books, The Pumpkin Plan and Surge, to be exact. But increasing sales does take time. On the other hand, cutting expenses can be done with quick results. Many of my clients easily cut 10% of their operating expenses on frivolous things like unused recurring membership fees, extra staff who are not productive, or unused office space. And don't get me wrong, cutting unnecessary expenses might bring you psychological pain, but I promise it is easier than creating new sales if you don't have a full sales funnel to work with. So take a stab at cutting expenses. Ask your bookkeeper to print a report of all overhead paid in the last 12 months. And if possible, sort this list by vendor name or by expense type. Once you have this list, scan it, and here's the 3 things you want to keep an eye out for. Cancel whatever you don't need to help your business run efficiently. Then look for things to cancel whatever you do not need to keep clients happy. And the last thing at this point is to negotiate every remaining expense except payroll. We'll talk more about cutting expenses in episode 12, but this will get you moving in the right direction until then. You are on a journey to become a frugal entrepreneur, but don't confuse this with being cheap. You are going to learn to use what you need and not be wasteful. You will pay fairly for what you use, but you will be using less. And I promise you're going to love it. So after day one and week one of Profit First, the next stepping stone is twice a month, your 10th and 25th. Mike refers to this as the 10th and the 25th rule. And this is something that I deviate from the book. So Mike suggests making allocations and paying bills on the 10th and 25th of each month. But for my allocations, I have them set up on automatic processing. I use Relay 5 for my business banking, and they have a feature that lets me put my allocations on autopilot. Check out my podcast episode number 4 for more information on that. And while I agree that you shouldn't immediately pay bills upon receipt, let them pile up for a few days and then queue them up for payment based on due date. But I personally struggle with paying on the 10th and the 25th because many times these fall on a weekend when my laptop is off. My firm is set up as an S Corp. So I regularly run payroll every other Monday for me and my staff, which I run it on Monday so that it gets paid on Friday. I choose to leverage this long-standing recurring task to become when I also pay any other bills that I have due. It just works better for me. And Mike presents a long example of allocating $10,000 to the various accounts. You can check it out on pages 104 to 106 of the book, but I think the lesson is more important than the specific percentages and dollars being allocated. When you do your allocations, you will start to clearly see how much money you have coming into your business and how you are going to spend it. Remember, we will be adjusting your caps quarterly. So what may be painful now, you will adjust to over the next few weeks, and then will slowly stretch to eventually reach your ultimate goals. Be sure to include in your allocations your transfers to your profit and hold accounts, or your profit and tax hold accounts. And a word of caution, there is a real possibility that you will not have enough money to pay your operating expenses or to pay yourself. This should be a major wake-up call. When you don't have enough money, this is your business screaming at you. Your business is telling you that your business cannot run the way you have been running it. Let me reassure you, Profit First did not create this crisis. It helped you notice that it exists. You are spending more than you can afford, but please don't panic. Continue to make your allocations and pay bills on your rhythm, whether that is weekly, bi-weekly, or on the 10th and the 25th of each month. You will begin to accumulate money and have a flow that you can manage. As a heart pumps blood rhythmically, forming a heartbeat, the lifeblood of your business, money should flow in a similar rhythm, not in a random panicky pump here and there whenever you have funds. So we've gone through day one, we've gone through week one, we've gone through our 10th and 25th rule. So the next milestone is quarter one, quarterly distributions. The new quarter has arrived. When you initially implement Profit First, this will be the first calendar quarter end that occurs. All future distributions will happen on calendar quarter end, meaning March 31st, June 30th, September 30th, and December 31st. This is where your Frankenstein monster starts to become a powerful and lovable beast and serves you a fine meal on a silver platter. Your profit distribution is your reward as owner of the business for having the courage and risk tolerance to start the business. Don't confuse profit distribution with owner's compensation. Owner's comp is your payment for working in the business. Profit is ownership reward. Your quarterly profit distribution will be 50% of the balance in the profit hold account. Leave the remaining 50% in the profit hold account as it will serve as a cash reserve for emergencies. The amount of the profit distribution will be allocated among all equity owners based on the percentage owned by each equity owner. But here's the thing, the profit distribution can never go back to the company. It doesn't matter what you may call that, reinvest, plowback, profit retention, no. If you need to put money back into the business, then it is not a true profit distribution, and it indicates that your business is not operating as efficiently as you can be, as efficiently as you should be. Okay, celebration time. Use your profit distribution for you, for your family. It's celebration time. Profit is intended to be your reward for having the guts to invest in your business. Take your family to a nice dinner. Fund your retirement account. Go on your dream vacation. Remember Jorge and Jose from the beginning of this episode? They have taken several dream vacations. Bermuda, Europe, Central America, Australia, and have gifted vacations to loved ones. Jorge told Mike, before we started using Profit First in our business, we were a little bit lost and wondered when the business would take off and improve our lifestyle. I don't think anyone wants to work just for the paycheck. You need more incentive. Now, at the end of the quarter, we really look forward to planning what we're going to do with the extra money. This is how you will fall more and more in love with your business. Enjoy your profit. But here's the thing, be sure to check in with your tax preparer every quarter about paying quarterly estimated payments if necessary. So each quarter, we'll need to move our caps, our current allocation percentages, by 1% towards our TAPs, our target allocation percentages. Move to your TAPs, not away. If you feel comfortable, the maximum change in any cap can be up to 3%. But remember, if you're too aggressive, it will cause you heartburn. Slow and steady wins the race here. This is all about continuing to build your habits and moving closer to your goals. So, our last milestone in implementing Profit First is year one. By now, you should be on a quarterly rhythm of evaluating and moving closer to your TAPs, celebrating your profit distributions, and reassessing your expenses. So, at the end of the year, nothing extra needs to happen. What you can do is look back at where you thought you would be at the end of the year to see if you beat your estimate or fell short. If you beat it, how? If you fell short, why? Review and learn. As you get your taxes finalized, you should have the money sitting in your tax account. If not, this is the only time you can pull money from your profit hold account to cover your tax bill. If this happens, you will need to meet with your tax preparer to determine what went wrong and how you need to change your allocations to prevent this situation from happening again. If you have too much money in your tax account after finalizing your tax return, congratulations. Move the excess to your profit account and consider it a bonus. Check with your tax preparer if your current cap was too high and if it can be downsized for the upcoming year. So remember, our profit distributions each quarter are only going to be 50% of the profit hold balance. The remaining 50% becomes our rainy day fund. Be sure to review this balance periodically. Ideally, keep a minimum 3 months of expenses in this account and invest the excess. We have some additional suggestions for this excess, but that's going to be discussed in a future episode. Profit First is a simple and impactful way to manage your firm's cash to ultimately fund your lifestyle. It's a way of life. So now it's time for our listener's question of the week. And I feel a little guilty. I've hijacked this section, but same as the last few weeks. Instead of a listener's question today, I've been using this segment to highlight tips about what we covered in today's episode. Today, I want to remind you that this episode is putting into motion the tasks we completed in the last few episodes. And so here's a recap of where you can find these items. So in episode 5, we discussed why accountants resist Profit First, because they're confusing historical accounting rules built for large corporations with cash flow management for a small business. In episode 6, we talked about the 4 core principles of Profit First. First is to use small plates, our 5 core bank accounts, and Parkinson's Law. Second, serve sequentially, which is making allocations in order of profit, then owner's comp, then tax, and then OPEX, and the primacy effect. The third core principle of Profit First is to remove temptation. That was setting up our 2 inconvenient bank accounts for profit and tax hold, because these are out of sight and out of mind. And then the fourth core principle is to enforce a rhythm, which is make your allocations and pay your bills on a set schedule to smooth out the peaks and valleys. In episode 7, we discussed that Profit First isn't new. It's also called the envelope system or cash stuffing, but what is new is that it's a concept for personal cash management that has been applied to small business cash management. We talked about which bank accounts you need and why you need them. In episode 8, we discussed the instant assessment, how to complete it, and what the results mean for you. And here's a hint. This is the episode I gave you a link to download my spreadsheet that does all the math for you. And then lastly, in episode 9, we talked about customizing your TAPs, your target allocation percentages from your instant assessment to best fit you and your business. So that gets you caught up for today's episode. If you would like to submit a question for a future episode, please send an email to podcast@profitscalethrive.com. And no, by sending us an email, you will not get added to an email distribution list. There will not be a phone call to you, and there will not be a sales pitch. We follow the golden rule to treat others how you wish to be treated. This week's inspirational quote is from John Dewey. Arriving at one goal is the starting point to another. Final thoughts for today. I hope you're enjoying this approach to the book Profit First. Today, we finally put Profit First into motion. We made our first allocations and talked about our allocation and bill paying rhythm. We have prepared for what our first quarter and our first year with Profit First will look like. So next week, we're going to be crushing debt. Before next week, though, I want you to do two things for me. First, start what I call a celebration list. This list will be ideas of how you will spend your future quarterly profit distributions, and post this list where you can see it every day. The second thing is decide on your allocation and bill paying rhythm. Block it out on your calendar in perpetuity. Plan for 5 minutes to make your allocations, and then delegate the bill paying part to your bookkeeper, but hold them accountable. If you have questions about today's episode, feel free to comment if you're watching on YouTube, or send me an email to podcast@profitscalethrive.com. If you know someone who might need to hear this information, please share this episode with them, or if you're on YouTube, tag them below. Be sure to follow and subscribe to get notifications for future episodes. Did you enjoy this episode? Please consider leaving a review. And before I go, remember, profit is something you intentionally plan for in the beginning. It is not a potential bonus at the end of the year. Thanks, and have an amazing day.